So let's welcome on board Mr. K Raju, the MD and CEO at Canara Bank, to talk to us about their earnings, because it was a decent set that the company reported yesterday. But let's see where they go from here on. Hi, sir. Good morning. Thank you so much for making time speaking with ET now. To begin with, your cost of funds have risen quite a bit in this quarter. What's your own estimate? Where will the cost of funds peak?
Already this cost of funds is increasing from the last October onwards. We started paying the higher rate of interest from October 6th. So the current, we already reached that interest expenses to the peak, to the whatever we have spent as the expected level. We have already achieved to that peak level. But the only thing, the current quarter also, that high interest rate regime is continuing. So in the current quarter, whatever the resources we mobilize in the form of term deposits may attract the same rate of interest. That's the reason actually we want to take benefit out of whatever the cushion we have in the form of a lower CD ratio. That we want to feel that we want to go beyond the 75%. The second one is we are focusing more on our CASA with innovative products, which already we launched on the first working day of the current last June quarter, and that has started giving some results. Whatever the new products we initiated, it has contributed to our balance sheet around in the last 4 months 3,300 crores, and we continue to focus on those initiatives, new initiatives targeting for the CASA. And the bulk deposits, we could reprice it when the interest soften was there from May 15th to June 30th. That is giving some benefit to for this quarter. The current quarter also, July onwards also, we have seen that in the market, the liquidity issue is there. So automatically the rate of interest will be high only. It will continue. But it will not impact on us already. We feel that we are already reach to that maximum level. At that level, it may continue little bit here and there.
So NIMs have slipped in this quarter a bit going forward. Where do you expect NIMs to ultimately then settle?
For entire financial year, we are given a guidance of 3.05 NIM in the initial stages, sir, for this current financial year. In line with that, last year our cumulative NIM was 2.92. The current quarter, we could able to show that the NIM of 3.05. Though there is undoubtedly, let me say that there is a stress on the interest expenses because of a higher rate of interest. But even then, since 52% of our portfolio is MCR linked, and this MCR linked is giving a good interest yields on us advances, even the repo rate comes down gradually. That will impact only 34% of our advances. So that's the reason we don't see any fall in the NIM below 3%. We are confident that we can manage at 3%, around that 3%.
Okay, Mr. Raju, your advances growth has been stronger than the guidance that you had given. Does that mean you will now revise your guidance upwards for FY24?
During the first quarter, we are given a guidance for this current financial year that our advances growth will be 10.5% current year. But when I was interacting with all of you, I expected that our credit growth may be at 12 to 14% range. In the first quarter itself, when we in the domestic credit, we can record a more than 3%. That itself shows that the whatever we have promised, that given the guidance that the 12 to 14% range, the credit growth, that can be easily possible, sir. We can ensure that our credit growth will be about 12%, in the range of the 12 to 14%. And the first quarter itself, we are given the year-on-year growth is 13.75%, 13.27%.
Okay, point taken. But we do understand that Finance Minister also met with a lot of PSU banks. I just wanted to get a sense from you as to what was exactly discussed, because there seems to be some sort of caution or red flag which has been raised regarding unsecured lending. Anything specific for Canara Bank?
I can speak about only Canara Bank. I cannot speak about all other banks about the unsecured advances. Our unsecured advances are very, very limited, especially in the retail sector. The concern, what the expression is, unsecured retail loans growth. It has crossed the industry. It is from earlier 23% to 25% something. But in our bank, the unsecured loan portfolio under the retail is linked with only the salary crediting people. We are not extending any our unsecured loan to the other guys who are not having a regular income. And we are also not giving to any other outsiders who are not our existing customers. Our product has been redefined. It has been little bit flexible. We made it. Actually, earlier we used to give the package for the department wise. Now we merged all the 1100 packages and we are given a comprehensive package to products Canara budget for government employees and the private employees. This scheme has attracted very well among the people, and we are also simultaneously aggressive in canvassing the salaried class for opting our Canara Bank as their salary dispersing bank. This product has got traction among those people, but our unsecured loan exposure will be confined only to the salaried class who are drawing their salary from our bank. So I don't see any threat or anything, though there is a good growth in this, but our base volumes itself is very nominal. Our volumes are only 7,000 crores in that area.
Talk to us about corporate loans again in this quarter, as we hear commentary from HDFC Bank suggesting that there is some mispricing in the loans.
From Canara Bank side, corporate pricing, there is no compromise on that. Now we are very much sure that being a big bank, one among the top 4 banks, we play a vital role on every corporate's growth history, growth story. So that's why every corporate wish to deal with us, but we are very much concerned about our pricing. We are not compromising for the just like that to show a top line growth. So last year we have grown when we have an ample liquidity in our system, when we have an the more than 40,000 crores liquidity in our system, which is outstanding, just the ideal liquidity that for effectively we invested in the last year first quarter. That is for short-term investment we made. But now the last quarter onwards, we started repricing all those things. We don't mind. We have actually 1 or 2 AAA rated companies. We have taken it back that whatever our exposures when on the maturity, we have not renewed those accounts, because unless otherwise we get that our desired pricing, we are not lending to and throw away for the just like that to reach the top line business. At the cost of bottom line, we are not lending any to the top line. But there is an ample scope, there is an ample demand for the credit. We already almost every month on an average 12 to 15,000 crores worth of proposals, new sanctions, it is happening in our bank. So last 4 months, we already did almost 55,000 crores worth of sanctions. So there is ample scope. So we are keeping the price as well as the rating or the credit rating of that company, both in mind. We are picking suitable to our balance sheet.
And also on the ECL front, is there an assessment that has been made on the impact of the ECL implementation?
Last time when we have shared with the analysts and all, that was a rough calculation what we made. Then thereafterwards, we sought many clarifications from the regulator and we got many clarifications out of that. Based on that clarifications, we have recalculated our requirement and it has now come down to on an average, it's a 2.25% of our requirement additional coverage that may impact only to that extent. For further guidance for us, till it comes for that final draft guidelines, before it is implementation, we want an expertise to be taken from a consultant, and we have gone to the market for onboarding the consultant. That consultant, it is being onboarded. We sure that with their expertise, we will further fine tune our effect on this ECL. It may be around 2%.
Okay, so the ECL impact could be around 2%, but sir, you've already touched your return on asset target, which was at around 1%. What next?
We have given is 1% our guidance to the initially when we started this financial year. For current financial year, we are given a guidance of 1% return on asset, and with all our efforts and the initiatives, we could achieve it 0.99 in the first quarter itself. One thing we are sure that we can easily achievable that 1% return on asset. But further anything is that this is only a minimum what we communicated to you. Our achievement will be above than that.